You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, for the 200th time. Yes, this is it. This is time for TWIFO, This Week in Futures Options. Yep, you heard me correctly. This is our 200th episode of this fine program, a little engine that could. Launched all the way back in the primordial ooze days of April 2016. Somewhere on the 25th to the 27th. I think we have some conflicting dates on the audio side versus on the website side. I'm going to lean on the 27th, but we could say 25th. Either way, late April 2016 is when a little program called This Week in Futures Options was born. If you're curious, that show's still available on our feed. Maybe we'll tweet out a link to it. In fact, we did, I do believe, this morning when we posted our celebratory tweet about this upcoming episode. We did include a link to that fine program. It was myself and our old friend, Mr. Nick Howard from Quick Strike, kicking things off, talking about crude oil. Well, some things have changed, some things haven't. That was still a big topic 4 years ago. The 10-year and soybeans. Those were the big topics of that first episode. In fact, back then, those early days, I do remember soybeans were shaping up pretty interestingly from a overall color and risk reversal perspective. Haven't seen that much since then, which is kind of interesting and shows how things change and how sometimes things stay the same. What hasn't changed is, of course, the audience. You guys have grown, continue to discover this program over the past 200 episodes. We thank you guys for continuing to tune in every week, sending in those questions and comments. You guys are quite literally the reason that we do this, so we're glad you're enjoying this, and we're glad to be able to provide you with some content in these otherwise trying times in a very little heralded area of the financial markets. Not many people out there talking about futures options, quite frankly. So we're glad to bring you some content on that space. And I'm glad to be joined once again by my cohort, my partner in crime, man who's been with me not quite for 200 episodes, but he's been on for a few of them. Mr. Sean Smith, the Managing Director of Derivatives Licensing over there at FTSE Russell. Mr. Sean, welcome and congratulations on TWIFO 200, sir.
Mark, happy anniversary of your 200th episode. I couldn't be more excited to be on this episode with you. So congratulations to that. It's a tremendous milestone, and it's a tribute to you and Gene of your team and listeners that this is a fantastic show, and I'm just very excited to be a part of it today. So congratulations.
Well, you deserve some of those congratulations, too. I think we're going to have a lot of people want to participate on this show, whether it's through comments or some virtual, some cameos, some pop-ins. We're going to have a little bit later, Sean, so stay tuned for that. That should be fun as well. Wouldn't be a 200th episode spectacular without some virtual fun. But, Sean, I thought we'd kick things off. We always like to look at the movers and shakers, but we thought, how could we jazz this up for the 200th episode spectacular? And I thought, what better way than to perhaps have the most epic moving and shaking of all time, at least in the history of this program. So we dialed back the Wayback Machine, not just to this week, not just to this year, but all the way back to April of 2016, all the way back to episode 1, Sean. So we could determine what were truly the most rockingest, movingest, and shakingest of products over the lifespan of the entirety of this show. And so we have that data. It's we actually widened it out, too, to include a top 10 for each, because 5 is not going to cut it. So, Mr. Sean, are you ready to dive into the most epic, movingest, and shakingest edition of all time, sir?
This is going to be really interesting. So, yeah, I am very, very excited for this list.
Before we go any further, without cheating, if you have any thoughts, if you have a feeling about what you think may be in the upside or the dark side, and I'll give you a hint, by the way, there's a lot more upside over the course of this past 4 years than downside. I'll just lay that out there. But if you have a thought, an inkling about what products might be in our most epicest list, making up a word there, what do you think they are, Sean?
I'll pick the strong upside, and I'll pick the strong downside just off the top of my head. I got to say equities are probably on the strong side. I'm not going to select which index outperforms what index, but so I'll go equities to the upside. And do you want my downside?
Yeah, give us a downside too. Why not?
I got to say energy. With the move to negative numbers in crude, I got to say that it's going to be on the energy side.
Well, let's find out. I have to also ask you my regular weekly question. It's TWIFO 200, sir. Where do we begin our journey on this most epic moving and shakers of all time? To the upside or to the downside, sir?
Absolutely upside.
I kind of figured, but I got to give you the chance. Maybe you want to shake it up. So let's go to the upside. These are going all the way back to episode 1. Which products out over there on CME? By the way, you guys can generate this report for yourself. You can choose whatever date range you want. CMEgroup.com/TWIFO is the place to go. You can see that report. You can do the market scans, all the This Weekend fun. CMEgroup.com/TWIFO is the place to go to begin your journey. And if you were so inclined, you could look at this data yourself and see that number 10 of all time in the history of this program, the number 10 mover to the upside, it's our old friend, Class 3 Milk. We just broke this down last week. It's become, over the lifespan of this program, it's moved from a bit of a joke and a footnote all the way up to, that's a product that actually we can sink our teeth into a little bit. It's got more options volume. It's got more volatility. It's certainly delivering on all the fronts that a lot of options traders would be interested in, and particularly in times when maybe traditional sources of volatility, like your equities or others, are maybe a little bit quiet. A product like Class 3 Milk is delivering, and it delivered over the past 10 years to the point of 32.9% to the upside. Number 9, you were right on the equity front, Mr. Sean. Number 9 was the Dow, the E-mini Dow, up 35.88% over the past 4 years and almost exactly a month. And then we got number 8, gold, up 39.42% over the past 200 episodes. Number 7, the S&P E-mini, the stalwart, the one that kicked it all off, the E-mini S&P 500, up 41.36% over that time frame. Number 6, not a product we get to talk about a lot, Rough Rice, up 44.86%. Number 5, iron ore, up 47.78%. Number 4, oats, another one we haven't talked about in some time here on the show. Maybe we'll have to squeeze it in today. We'll see. Up 53.18% over that time. Numero trace here, the Eurodollars, up 67.86% over the past 4 years and change. Number 2, the NASDAQ 100 E-mini, up 113.76%. And number 1 with a bullet to the upside, blowing the doors off everything. Mr. Sean, do you want to hazard a guess what the number 1 product is, sir? Take a flyer, whatever you think it is. Your silence, I'm going to say you're probably going to go out on a limb and say palladium. Is that what you guessed on? If that's the case, then you are a sage.
I was on mute. Nick Howard. I have Nick Howarditis.
You do. You totally do. You were yelling palladium, but it was muted, so no one heard you, of course.
That's so funny. I actually said gold. So you win.
You were close. I'm going to say you were muted and you said palladium, so I'll give you that little bit of extra bonus points. Palladium listeners up 242.61%. That is our number 1 mover and shaker to the upside over the entire history of this fine program. Here, now let's go to the dark side. If it wasn't a license infringement, we'd play a little, perhaps Imperial March right now. Get a little spooky music going out there. Let's see. Number 10 to the dark side, going all the way back to episode 1, listeners. It's corn. Off, not quite 17%, but close, 16.96%. By the way, the magnitude of the downside to the upside, a little bit different here as well. Number 9, live cattle, off 17.06%. We've certainly seen a lot of moving and shaking in that segment, the meat segment, over the past month and change as well. So an interesting one there. Number 8, soybeans, one that kicked it all off on episode 1, off 17.87%. Hasn't really lit it up too much since, which is kind of weird. Number 7, soybean oil, off 19.46%. Number 6, Brent, off about 20 1/3%. That means you probably can guess what number 5 is. It's our old friend WTI, off 24.01%. It's actually tied exactly, how weird is that, with number 4, heating oil, also off 24.01% over these 200-odd episodes. Number 3 is the peso dollar. Actually, interesting. We don't really talk about that one a lot as well, off 25.29%. Numero dos, going back to the livestock side with lean hogs, off 29.76%. And the number 1 mover and shaker to the dark side, RBOB gas, off 32.76%. So we covered a lot of ground there, Mr. Sean. A lot of things have happened over the course of the past 200-plus episodes. Which of these catch your fancy, sir? I'll allow you to choose where we begin our journey today. Which of these top 10 to the upside or to the downside should we sink our teeth into first?
Let's go with energy. I think it's a relevant story today. So let's.
I think we can do that. If there's been one theme to the 200 episodes, almost all of them have had crude really top of mind for a lot of you out there in the listening audience. A lot of your feedback is based around crude episode to episode, and of course, a lot of what's moving out there of late has been, of course, over this time, we've seen a lot of the interesting things going on with OPEC. As a result, we've seen the skew flip multiple times. We saw the run-up and then the big sell-off. We were here, and the show was live when we had the first initial really plummet of WTI. I remember at the time when it dropped all the way from the par strike and started getting around the 60 level. That's when people were like, okay, you know what? This far and no farther. This is where things are getting a little bit out of hand, and people were blasting away at puts on that 60 strike in WTI pretty aggressively, and lo and behold, that was not the bottom, not by a long shot. It fell another 20-odd handles out there. So that left a mark on a lot of people, and it seemed to shake people out of the premium harvesting in the WTI space for a little while. Then, of course, we saw all the back and forth and the tumult we've seen of late out there in WTI as well. So there's been a lot of interesting, ongoing, long-term narratives, in particular with WTI and with energy over this past 4 years and a month that we haven't seen in some other products, which is probably why it's been top of mind for us and for a lot of you out there, and it's certainly why it's on our movers and shakers here. Coming into today's show, there's been a lot of talk about what's going on. Of course, the big story out there for the last month, really in the commodity space, was WTI trending negative in the front month. Everyone kept asking, oh my God, is it going to happen again? Is it going to happen again with the June contract? In fact, even Wall Street Journal putting out some interesting analysis recently, looking at the OI out there in WTI compared to a year ago and saying, you know what, it seems like The negative dance to the dark side there in WTI really spooked a lot of people out of the front month because compared to last year in the open interest, there's far less in the front portion of the curve than there was a year ago. Like in the June contract, for example, last year there was closing in about 100,000 contracts. This year, about half of that in the front June contract. Last year in August, same deal. July 1st. Last year was well over 330,000 contracts. This year, decently shy of that. In the August, we're seeing now as you get a little bit farther out, you're seeing more paper. August, you're seeing looks like about 250,000 contracts open, and you're seeing well shy of 200,000 as last year. Same deal out in DEES. Last year, DEES was a little bit north of 220,000 OI. This year, about 340,000 contracts open out there. So a market shift to the longer term portion of the curve, and that makes sense given what we've seen. What they don't account for in this chart, which I think is an obvious driver of this change in OI, is also the change of structure of USO. USO made up the lion's share of that front month OI in WTI, and they're not doing that anymore for a lot of the reasons we've outlined here on the show before. They had to get the hell out of the front month because it was just too crazy for them, and also because of position limits. The CFTC wouldn't let them have more exposure to the front months. They started rolling out first 20% to the next month, and now, as we've broken down many times, they're all over the place, including out to June of 2021, and a pretty sizable position in DEES, which probably accounts for the lion's share of that change. So a lot of these OI changes can probably be tracked to USO and a few other of these ETPs out there that trade in that space, but still, sane heads out there probably wanting to avoid the front month, and I can't really blame you. Coming into today's show, let's see what's going on this weekend, not going all the way back 4 years and a month this time. Let's going to look at this week. Coming to Showtime, like I mentioned, seeing WTI north of that 33 level. Put that in some context, listeners. We were negative 40 in the front future not too long ago. Now we're at 33. So you're talking a 70-odd handle swing in the space of just a few weeks. So if people are wondering why WTI is still so top of mind for everybody, just ruminate on that for a little bit. Coming into today's show, we're seeing it was the July contract at about almost 45% of the flow this week that really dominated the tape out here. Looking at the vol, the vol's in a little bit, kind of about a point to a point and a quarter, depending on where you're looking. Let's go out to DEES. A lot of paper is set up out there. The DEES vol is off about 1 1/8 from an overall vol perspective, like throwing the old fractions out there. It's like the old days again out here. Most of the other months are off about a point. You get much farther out, you get into 2021, you start seeing vol actually creeping up a little bit, maybe reflecting, like I said before, some of that love for the longer term portion of the curve out here. Back to July, what was the big print out here this week as we're hovering at a 33, almost 34 out there in WTI? It was the 30 puts, even money puts, lighting it up to the tune of about 11,000 and change. The big day was today, 3,600. Also saw 3,010 on Monday. The rest scattered throughout the week. Most of that opening. So more opening downside put paper in WTI. Hey, as you broke through that 30 strike, not surprising. Some folks might be prepping for a bit of a return to the dark side. Also, again, we did just see negative crude 70 handles below this not too long ago. So maybe a few puts in your back pocket is not the craziest thing out there. Number two, we got the 35 call. So there is still some upside, lighting it up to the tune of 10,276. The big day was Monday, 3,300. Looks like slightly biased to opening, about 1,000 contracts opening there. About 3,200 opening on the 30 puts, so a little bit more opening there. Then we fall off a little bit again to the 25 puts, getting more bearish with about 9,200 of those the big day. Also today, 29.83, and about looks like biased towards the opening there as well. Let's go out to the skew, see what the skew has been up to. We're going out to this July contract, listeners, because this is where the lion's share of the paper has been. We saw a week ago the puts were 7% rich. They had the money. This week, they're about unched. They're about 6.7%. So it hasn't really been a big change in the put vol, which is kind of interesting. And again, saw puts leading the dance out there, so there's enough put paper out there to keep it pretty much stable where it was this time last week. On the call side, the calls were 4% rich. 4% cheap. 4% rich would be a very big deal indeed. We haven't seen a bid to the calls in quite some time. 4% cheap. This week, nearly 10% cheap. 9.8%. So the calls coming in, the puts staying about the same. Maybe the fact that we broke through that 30 strike, also taking some of that off the table and resulting in a little bit of that decline in the vol up there on this call wing. Either way, the call's coming in pretty hard this week. This contract has about 27 days to go, so it's still a pretty beefy contract. Interesting stuff. Perhaps not exactly the 30 puts I kind of expected, but the call wing weakness, continued weakness perhaps not so much, especially given the interesting upside we've seen over the last week and change. Let's go a little bit farther out. Let's go to DEES 2021. That's where the 50 calls are lighting it up to the tune of 5,600 of those bad boys. So someone playing in the upside, almost all of that today. 3,800 today, 1,300 yesterday, 500 on Tuesday. It looks like 40 is also lighting it up to the tune of 3,500 today. So maybe a bit of a funky vertical going up out there. It's like the 40s in DEES 2021 going up 3,500 times today. The 70s going up 3,000 times, and the 65s going up 1,100 times today in DEES of 2021. So perhaps some funky verticals, 40-50 or a 40-50-70. The 65s are kind of the odd duck in there. But interesting stuff afoot up there in the upside on the call wing in DEES. We could keep parsing this. Let's head on into your stomping grounds really quickly, Mr. Sean, because there's a lot to parse there as well. Get on out. Of course, you guys, as always, like I mentioned, cmegroup.com/TWIFO. I want to get to some of your questions. We have a lot of well-wishers who want to beam into the show as well. So a lot still yet to do here on this TWIFO 200th episode spectacular. Mr. Sean, coming into showtime. We have seen, looks like on the equity side, the rally taking a bit of a break, at least right now. Coming into showtime, saw most of the major indices off about 0.5% or so. Also saw vol, compared to last week, down quite a bit as well in the equities. Remember, we saw most of this week, we were rallying. There was all that optimism on the vaccine hopes. There was the new stimulus package. All of that really bolstered a lot of the equity indices. So vol came off pretty hard since last week's show. RVX coming into showtime, which is, of course, the VIX of small caps at about 41.65, puts it off not quite 9 handles, about 8 3/4 points. And we saw the VIX come into showtime right around a 29.15 or so, puts it off about 6.15 from last show. So that puts that spread right around 11.5 points out there, which is still extremely wide, but nowhere near the 15 it was a week and change ago. Mr. Sean, obviously it's been an impressive week. Yet again, we're seeing days now out there in small caps land where we're seeing, limit up in the small caps, and it's kind of, as the kids say, off the chain these days out there in the small cap land. Must be busy for you. What's been lighting up your tape in small cap land, sir, over the past week?
Well, as you just said, small caps continue to be volatile. As that spread, even 11 and changes, is wide. And again, it was, what'd you say, just over 15 last week. That RVX VIX spread is just something that you really should just continue to watch and to know to be able to take advantage of the RVX side of the spread. You would trade RUT options at CBOE Global. But, we're getting into RECON world. It's Russell reconstitution time, and just, May 8th was rank day where, the eligibility for the 2020 reconstitution was determined. So May 8th was the beginning, and tomorrow, May 22nd, begins the query period for those stocks to be added in or deleted from the indices. So we're getting into reconstitution in a big way these next coming weeks, which all culminate, as we know, on June 26th at the closing bell. And it's the Russell reconstitution. So we're gearing up. We're getting really excited. There's been a lot of news in regards to this out there. There was an article last week coming out of Bloomberg regarding lots of movement of stocks. I'm not going to comment on various stocks within the indexes at this point. We're opening that query period starting tomorrow. But this is crunch time for the FTSE Russell folks and doing all of that analysis. To end up, as I said, culminating on June 26th with Recon Day. So we're entering an exciting time, and there's always been questions about volatility during these times. Does this add volatility? Does this take volatility out? And as you know, we've had lots of conversations regarding Recon and the fact that we're so transparent about this process and the stocks and the add and delete lists and the notifications that it actually does not add volatility, and reconstitution happening on the close eliminates a lot of that as well. So, but what it is, it's just a very exciting time to see where Russell U.S. indices will be recast to reflect the changes in the U.S. equity markets over the last year. It's just a really exciting time, and very excited for this June and the recon season. So stay tuned for that.
Well, given the feedback we've gotten from our listeners, just the impact of the pandemic alone, I think a lot more people seem to be paying attention to obviously it's a big event always, but this period in particular, more people have been writing into us. We talked about it a lot in the last show with insights and questions about how that's going to work. So it seems like even more so than in years past, this is going to be an interesting one to pay attention to. And it seems like a lot of you out there are doing just that, judging by your feedback. We're parsing listeners. We like to try to mix it up here on the show. And again, we have a lot of virtual cameos who want to come in, and your questions too. We're going to get to all those. Maybe we'll run a little bit long today because it is the TWIFO 200th episode spectacular after all. We like to mix it up with the names we talk about here on the show whenever possible. Unfortunately, it's not always possible. Like we're looking here at the number one mover and shaker over the past 4 years and a month to the upside is Palladium, listeners. So that's one we'd love to break down for you. But this week, unfortunately, it did a whopping 7 contracts from an options perspective. So not really a big options story there. What about Oats? Not one we featured on the show in ages. So it would be fun to get that one on the show. Unfortunately, 24 contracts went up this week. So not a lot of paper there to really sink our teeth into. Rough Rice is number 6 on our upside movers, up nearly 45% over the past 200 episodes. It did a whopping 298 contracts this week. So not a lot to parse, unfortunately, there either. Getting to the dark side, peso dollar. Haven't really talked about that on the show, maybe ever. That'd be fun to sink our teeth into that one. Unfortunately, 92 contracts. So I thought it might make sense to go back to where it all started, to the beans, because we haven't talked beans in quite a while here on the show, and they actually lighted up to the tune of this week, 143,138 contracts. So a little bit different than, let's say, the 92. of peso and some of the other contracts out there. Come into Showtime. We're seeing the soybeans. By the way, you guys can find this as always. Get on over to cmegroup.com/TWIFO. Get into the ags and get into the beans. There's various flavors out there. You can do the oil and everything else. We're just talking the straight up beans here. The listeners, they're at about 835 coming into Showtime. Puts them off about 1/4%, not quite 0.5% on the week. So a little bit of an easing in the front portion of the curve there for the old beans. The most active contract out here was the July contract, about 36.5% of the paper out here. That contract vol is actually up about 8 3/4 points. So big move in vol out here. It's got about 36 days to go. So still a lot of meat left on the bone there in this contract. The big print out here this week, it was actually a tie. It was pretty close to a tie. About a couple of contracts different between the 900 calls, so the par calls here in July, doing 5,525. And the big day today, almost 2,500 of those, almost half of that going up today. The rest scattered throughout the week. Slightly opening, but again, we don't have today's paper. And then the 840 puts back here in the June looks like, just the June contract, which is going out in about a day. And these have about 5,572. So this is actually number one by about almost 50 contracts out here. And that big print was they're actually equal. They've been trading all week. The big day was Tuesday, 1,800, 1,500 today. The rest kind of scattered throughout the week. Also, slightly biased towards the opening, but not quite. So not a lot, I should say. So really a lot of back and forth on this strike, which is kind of interesting. Getting back out here to July, where the most paper was this week. Let's go to the skew. Last week, the puts were pretty cheap, 13.3% cheap. This week, getting bid up. They're up almost a full percent rich to the at the money. So that's over a 14-point swing, listeners, over the span of the past week. So the puts getting firm out here in soybeans, which is kind of interesting. Can't say the same thing for the calls. The calls were about a third of a percentage point cheap this week. They're actually bid as well. They're about almost exactly the same. Got a bit of a smile going on out here, actually. They're about 0.9% rich to the upside, and the puts are 0.9% rich to the downside. So we actually got a pretty firm smile out there in at least July in the soybeans, which is kind of interesting and a marked difference from what it was just a week ago out there, where the calls are pretty much even and the puts were extremely, extremely cheap. So a big swing in the skew over the course of the past week out here in the beans, which is kind of interesting. That was why we kind of got drawn into soybeans. That's quite frankly why we launched this show, because those changes in the skew are kind of what are interesting, really what we want to sink our teeth into on a program like this. You don't really see that as much in, let's say, an Apple stock or something like that, where the skew is mostly the same. It's just a question of degree. Here we have complete swings week on week, which is kind of interesting. I want to keep going with more products, but you guys want to join us. Got a bunch of virtual well-wishers and cameos to get to as well. So without further ado, let's get to all that fun. It's time for your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, let's get to it. Mr. Sean, a lot of people want to join the party here with us. Are you ready, sir, to kick off even more so this TWIFO 200 celebration, sir? Are you ready?
I am ready.
All right, then here we go. I don't even know who we have in store. This is a surprise to me as well. So I am eagerly awaiting alongside with you. Let's see who our first special guest contributor / well-wisher / cameo is here.
Hi, this is Russell Rhodes, infrequent guest on TWIFO. We're sending a little message about it being the TWIFO 200, which, no, is not a NASCAR race that would be run with nobody in the stands right now. I just want to say congrats to Mark and Gene, who really runs the show, for getting to the big threshold of 200 TWIFO episodes. All I want to say is that I expect more fixed income in the future. But again, congrats, and thanks for letting me be a small part of TWIFO.
Thanks for that, Mr. Rhodes. Look at that. Mr. Rhodes chiming in for some well wishes. He left
Rhodes.
He left you off the list there. We'll have to give him a hard time for that, Sean. But he did give well-deserved praise to our producer on this program here, Miss Jean. She does run a lot of things behind the scenes, listeners. You don't see her contribution, but you hear it on every episode. She keeps things organized well. So Russell's smart. He knows where his bread is buttered, Sean, because if he plays nice to her, he'll get booked again, right?
Don't we know it? Don't we know it? It is Jean's show.
It is. It's her world. We're just living all in it. Let's see what else our listeners have in store for. We got more cameos set up after this. Let's see. Engeli, he says, hey, congratulations on TWIFO 200. You guys rock. No, Engeli and everyone else out there who sent in well wishes, you guys rock. You guys, I said many times, are the reason we do this. It's more important now than ever. Everyone's kind of got some questions. Everyone's a little bit concerned. Maybe nerves are a little frayed. Maybe you're a little bit closer to your family than have been for some time than you really intended. So we're here to talk you off the ledge, give you a little bit of insight, maybe into markets you don't always follow regularly, give you a little bit of a breakdown of how they trade, point you in the direction of places you can go to find more information, and kind of just keep you occupied for a little bit here too. So yeah, at TWIFO 200, the show, if anything, is more necessary now than ever. So we're glad you are liking it, Engeli, and everyone else out there is feeling the love. We're glad we can keep the show coming to you. Interesting nugget here, Sean, before we get to our next virtual contributor here. We were just doing our option block show. We do that with our friends over there at TradeStation. They were saying they like to break down what their clients are trading a ton of. And they said for the first time this past week or so, they've seen Russell 2000 breaking into the top 10 through IWM and RUT and a couple other products have really been dominating the tape over there at TradeStation over the course of the past week, Sean. So maybe those people are listening to this show. I don't know. But either way, Sean, seems like the retail is starting to flock into that. What do you think?
Yeah, there's no question. And maybe some of them listened to the webinar that we posted last week as well with both of our partners, SIBO and CME Group, on small caps and pandemic. So that show had a great bunch of numbers. But you know, small caps are the topic, right? The volatility and the domestic qualities within that Russell 2000 index have a lot of eyes. There's lots of discussion on it. No matter where you look, no matter what periodical, no matter what newspaper you're picking up these days, there's an article about the small cap index, Russell 2000, in the news, and for good reason. It definitely outperforms to the upside as we have seen as these markets have rallied, and it's been a tremendous index, and again, lots of eyes, lots of topics. And it makes a lot of sense that when people go to the screen and see liquidity in the Russell Micros on CME Group, the Russell Minis on CME Group, the Russell Options as well, and the Russell Options on CBOE, and RUT in particular, there's liquidity, and people can get in and out of those markets rather well. So keep trading, and always know your risks of getting in and out of the market. But very, very exciting times, and the momentum's just going to pick up as RECON season starts as well.
Now let's see what else is picking up. We'll see who else is joining us virtually here on this TWIFO 200 Palooza.
Hello, Option Insider Radio, global conglomerate. This is Andrew Giovinazzi from Option Bit, The Rock Lobster, wishing TWIFO a happy 200. Get your futures, get your future options, get your skew, get it all. Mark Longo and company has options and futures for you. Congrats, gentlemen, on 200.
Well, there you go, Sean. A little bit more love this time from our old friend, the Rock Lobster. Hasn't been on TWIFO in a while. Maybe we'll have to get him back on, sir, to talk all things equity volatility. What do you think of that extra dose of love coming your way, sir?
He's fantastic. The Rock Lobster rocks it up. He's actually really good on the show. I think he and I would have some fun. So, yeah, I welcome him joining us.
There you go. Everyone angling for more spots here on TWIFO going forward. I got a comment coming in here from Thanos, the Mad Titan himself. He of the Snap infamy. He's chiming in. We were talking about an article that Bloomberg posted about traders abandoning their VIX bets as stock conviction vanishes. He chimes in, yes, with the Dow Jones and S&P, I can understand that. NASDAQ and Russell, I would be more concerned, he says, I guess for the upside from a vol perspective, which they have been very volatile of late, so I can maybe see that concern. He says, let the VIX tank to about $2 before I get into. I don't know if we're going to hit 2, let alone the fact that it's not really dollars, it's points, right? But that's nitpicking. That's neither here nor there. Interesting stuff here. I don't know if I can maybe agree with the sentiment of the Russell 2000 and the NASDAQ being more volatile. So watch out for the upside on the vol side. I don't know about VIX dropping to 2 anytime soon. I don't think we're going to be seeing those levels. Sean, any thoughts here? He's chiming in on maybe being a little spooked at getting short upside vol in small caps right now. Kind of hard to blame him, sir.
It is kind of hard to blame him. Just we're in volatile times right now with this pandemic, and the market reacts headline by headlines, tweet by tweet, right? So let's it's a great opportunity to be in the market. So as I always say, know your disciplines, know your strategies, getting in and out.
Let's keep the comment train, what you guys have on the brain, flowing before we get to some more of our virtual guests. N7 chiming in saying, thanks for 200 great episodes. Keep breaking down this stuff because my portfolio needs it. Hashtag TWIFO 200. Yeah. We've seen a lot of that out there. There, quite frankly, isn't a lot of content on this side of the market. I don't know why that is. We created this show specifically to fill that void, and we thought for sure a lot of people would be aping it by now, 200 episodes in, and they have not. I think it's an intimidating marketplace for a lot of people. A lot of people don't have the tools to really analyze it correctly as well, which has been a big key to this program. So tip of the hat to Nick and all of his team over there for creating those tools that make it easy for us to parse this week in, week out. CMEGroup.com/TWIFO, the place to go to begin your journey. All right, Sean, we got more virtual guests coming up. Let's see who we've got next here on the docket.
This is Uncle Mike Tusoff from the Option Block. Congratulations to TWIFO, Mark Longo, the Options Insider, and the CME on 200 amazing episodes. Great job, guys.
Good old Uncle Mike chiming in. He hasn't been on in a while either. I think because he promised me so much action in his 2-year silver collar, and yet hasn't really materialized. It's been kind of a sleepy trade over the past year and change that he's had it on. But there you go, Mr. Sean. Even more love for the TWIFO show, sir.
It's great. It's great. You've got quite a fan club, and you've got some great talent that contribute to the show. It just all bodes well for the listeners and the value they get today. And the fact that it's going to continue, and I couldn't be more excited to be part of it. So once again, congratulations. I'm really excited, and these tributes are just more ammunition that this is a fantastic show.
Well, you are certainly a part of that, sir, so take some of that. Congratulations. We have a frequent listener, Olive Trader, out there. Olive Trader 2, actually, to be precise. He chimes in a lot on the show. He asked us last show about, is there a difference between buying a future and the calls? I kind of corrected him, and he kind of wrote back in with his correction. He wanted to know about selling a future versus buying 250 delta calls, and talking about the strike volume, that sort of thing. Sean, I touched on this last week, but I know you had some things you wanted to chime in on this one as well. We didn't have time to get to last week, so he's a regular listener. We like to keep our regular listeners happy. So if you have anything else you want to add here to Mr. Options Game, a.k.a. Olive Trader 2, have at it, Mr. Sean.
Is it Olive Trader or is it Live Trader 2?
Oh, that's a good point.
I'm thinking he's a live trader.
That could be too.
He probably trades live market.
I like the notion he's out there slinging cans of olives somewhere, because there's no listed olive contract that I know of, at least not on CME land, but it would be fun.
Yeah, I'm thinking it's like you make the comment, wise one. Karnak, the great. Yeah, I don't know if I'm aging myself with the Johnny Carson.
I recall a little Karnak. It wasn't precisely before my time, but I do recall.
Wise one. Yeah, so I'm thinking Live Trader, but I could be wrong. I love to throw these acronyms around. Back to his question. Yes, he's buying a synthetic put, buying a call and selling a future, and he's buying the call, so he's got a back spread on. I think I made the comment, synthetics are the same calls. And this is something I learned in my options training way back when I was a trade assistant on the floor of the Philax and on the Amex, where I traded in. Calls are puts and puts are calls. If you create the synthetic using the future offsetting, you create a synthetic position, adding that downside protection or that downside profit along with the upside. So yeah, that's very much buying two calls and selling a future is a back spread, a straddle, being long gamma, I think, as you put it in Greeks last week, Mark. But I just wanted to add that because his first comments were, buy a future and buying two calls, and we actually call that a Texas bull spread back in the day. So I knew as soon as I saw it, he was either buying a future and buying two puts, or he was going to be actually selling that future against the two calls. So
the old Texas hedge. I don't know how that. I think it must have been a Texas trader who hit the wrong button, but ever since then, Texans have been associated with incorrectly hedging out there, which is kind of funny. There you go, Olive Game, three shows in a row. So there you go, a little bit of love. You guys can't complain about not getting the love here on the show. Like this love coming in from just then. Interesting handle. Then says, I've been listening since episode 1. Oh, you're the one. That's you then. Thank you. He says, love it. Thank you very much. Hashtag TWIFO2. Well, you're welcome then. Again, like everybody else, I'm kind of embarrassed by the outpouring of love, but I do love it because it shows you guys have been listening. You guys have been enjoying what we're putting out there. And it makes it all worthwhile at the end of the day for doing a show like this. Sean, I think we got another well-wisher. There we go. Another virtual contributor here to the show.
Sean, congratulations on your 200th episode of This Week in Futures Options. You're a beacon of light helping listeners understand the benefits of using FTSE Russell listed derivatives. Keep up the good work.
Well, look at you, Sean, getting your own personal call out here. That was, of course, Mr. Rick Rosenthal. Easy for me to say. He's been a frequent guest here on the show. It was on just a few weeks ago. Look at him. You're getting your own personal shout out on the show here, Sean. How's it make you feel?
Rick Rosenthal thanking Sean. What the heck? This is your show, Mark. I'm just excited to be on it. That was just a really nice message from Rick. You know what it is? We got to get him back on the show and talk about RVX. We need to have him back on the show. He does such a great job, and he's always fun to have beside us when we can be beside each other again. But that was really nice, and I think he said Sean as a slip. He meant Mark, but always good to hear from him.
He clearly meant you. I told you. You're a part of the show there, Mr. Sean, so you're getting your love there as well. I'm happy. I, for one at least, am happy to hear it. More comments coming in. Goose chiming in. Congrats for 200 episodes. Thanks for directing me to the FTSE Russell blog. Been very informative. No doubt they're talking about that coronavirus impact report you guys have been doing over there, as well as, of course, the recent webinar I know we tweeted out that link. A lot of you seem like you liked that webinar, just judging by the response to that. So clearly you guys are liking that. That's the whole point of the show. Sending you to data, whether it's on the TWIFO page, whether it's on FTSE Russell, and we just want to arm you guys with the information to use in your trading. So, congrats to us, and thank you to Goose for chiming in. Tim has a more specific question here, Sean. He wants to know, what do you think will happen to options when the trading floors come back? CME has mentioned a return date for the floor. I'm not sure if some of the other exchange. I think NYSE has obviously talked about coming back on the stock side. I think SIBO still hemming and hawing on an actual date out there, but we are looking to see the return of some sort of socially distanced floor trading in the near future. Obviously, CME made a lot of headlines taking products like Eurodollars off the trading floor, things that have been just inextricably linked to the trading floor since they launched. So the notion of those things being 100% electronic, I think, was somewhat anathema to a lot of people out there. So these are, again, I said before, these are somewhat rarefied times we find ourselves in right now. Whenever you're complaining about liquidity or spreads or anything else, just remember that. That's exactly the environment we find ourselves in. On top of everything else, the hitting the circuit breakers, the volatility, all the other madness, that's all icing on the cake of the fact that this is all completely electronic for the first time ever. So interesting stuff. I've had a chance to ruminate on a similar theme of this question on other shows, Sean. So I'm curious, what do you have to say here for Tim? You're out there talking to a lot of the trading firms out there, particularly on the equity side, there is a lot of demand for the equity complex orders. What do you have to think for Tim? What do you think is going to happen to options when the floors come back, Sean?
Hey, Tim. Again, we get a similar question every week, but it's just a great question because when these floors come back, these complex transactions are going to come back, and with these complex transactions, you get increased volume, you get increased open interest. I don't think that a lot of customers have stayed on the sideline, but I think they've been just trading the way they can electronically. But when you can have that additional touch to the market that the human brings, that the broker brings, being able to really custom trade, I think that the floors are going to be bringing that value back, and I think you're going to see some option volumes and open interest grow. That being clearly Eurodollars, SPX, and our RUT options. I think you're going to be seeing quite a nice jump in RUT options as well. The Russell 2000, as you know, it's getting lots of attention these days. I'm curious to hear when SIBO Global opens up their trading floor. They do a tremendous job with their products there, and really looking forward to hearing the news.
Yeah, I think it'll be interesting. Equities obviously are a product complex that will really benefit from the return of the floor. I mentioned Eurodollars as well. That obviously will be one that will benefit. Maybe some of the ags and others out there will be kind of interesting to see what we see from a volume and a volatility perspective. But certainly when I look for the impact, it's going to be first and most markedly felt, I think, in the equities and indeed in the Eurodollars out there. So yeah, we're paying attention to that, Tim, and everyone else who's been asking similar questions for now. I think we all hope tighter spreads, a little bit more volume, a little bit more liquidity as a result. But again, we don't know how this is going to play out, what a socially distanced trading floor looks like. Everyone has to be 6 feet apart. How much paper can you do in that environment? There will be logistical challenges to overcome before all of that can be sorted out as well. But I think everyone's hoping when they do come back to have a little bit tighter markets, a little bit more liquidity, and maybe tamping down some of the vol out there. There's a lot of people who have been pointing the fingers at the lack of a trading floor for things like WTI going negative and the huge spike we saw in VIX and volatility as a result recently. And there may be some argument to be had there as a result. So maybe hoping that some of these return of the quote-unquote level-headed trading floors out there, maybe, not always level-headed, but sometimes, maybe that will help return some normalcy out here to the markets. All right, so much love pouring in. I really do thank all you guys out there for all this. We'll wrap up the love here with Jalen. Jalen wants to know, why don't more people talk about this stuff? TWIFO is the only game in town and also the best. Hashtag TWIFO21. Thank you, Jalen. Like I said, we love you guys all out there as well. You quite literally could not do this show without you. Just be me and Sean talking. That would be fun, but not quite as fun as having you guys tune in. So we're glad to have you out there. Yeah, I said this before. I don't know. I think it's just an intimidating space for a lot of people. Even for me, I've been in the option space for a long time. When we first started doing this show, there was a steep learning curve for some of these products. I would never claim that I am the master of all things Eurodollar options or, lean hogs. But it has been an interesting and indeed an intimidating learning curve at times for how these products trade, how the skew shapes up, how the volatility plays out in the marketplace, what kind of paper flow goes up in these products. That's another area you kind of have to get a little bit more accustomed to. So a lot of people, for whatever reason, don't want to do that work. They don't want to dive in. They're happy doing their apples and their spies and whatever else it is. And for whatever reason, this side of the fence is a little bit, perhaps, too intimidating. There it is. All right. Unfortunately, listeners, that music means this TWIFO 200th episode spectacular has come to an end. But you'd be saying to yourself, I could use a little bit more spectacular in my life. Well, you don't have to wait too long. About exactly a day, even less. We'll be back here for VolViews 400. 400, yes. So as fun as this one was, that might be 2x as crazy. We'll have more special guest stars and fun and comments and all sorts of good stuff. To find some interesting historical look-backs for that show as well, because that show's been running for quite some time. So it might be kind of interesting to put some things in context out there in terms of nearly a decade of what's changed in the vol space. A lot. Spoiler alert, a lot has changed. Products came into being and then went away, and then new ones came, and all sorts of madness. The peaks and the troughs of volatility over the course of that time frame. A lot to unpack. Some special guest stars on that one who have not been on the network in quite some time. I know a lot of you are going to be excited to hear from, so stay tuned for that tomorrow. VolViews 400. It's an epic anniversary week here on the network, just how it worked out. Crazy. We did Option Block 900 a few weeks ago, so hitting some big milestones here on the network. And again, it's all because of you guys. You guys are the ones who are out there chiming away, downloading, streaming, enjoying, listening to on Facebook or Twitter, wherever else you get it, YouTube. And then, of course, coming out there, leaving your questions or comments. We do love to hear from you guys. Mr. Sean, I appreciate you joining me for many of these 200-odd episodes. Hopefully you enjoyed this 200th episode look back on all things TWIFO. Before we go, sir, do you want to leave our folks out there with a little bit of love of your own? Have at it. And also, where they want to go to learn more about all things FTSE, sir, where should they go? What should they do?
Well, first of all, congratulations again, Mark. 200 shows is just a tremendous milestone. I couldn't be more prouder to be part of the show. So thank you very much, and very excited to continue working with you. S. Smith, my email address, smith@FTSERussell.com. You can email me, reach out to me. I'm happy to share information, answer your questions. Well, please go to the FTSERussell.com website, FTSERussell.com/reconstitution. There's a reconstitution page there where you can get all types of incredible information regarding Russell Recon. We benchmark, investors benchmark over $15 trillion to FTSE Russell indices, and $9 trillion of that is to the Russell indices. So there's a universe of investments out there benchmarking to our products. It is definitely worth a look at our website on the reconstitution side for all the information you need. But us, along FTSE Russell, along with SIBO Global and our additional partner CME Group, all three of our websites have fantastic information regarding our FTSE Russell suite of products. So please go to all three of our websites. And in the meantime, smith@FTSERussell.com, you can reach out to me, and I'm happy to answer all your questions. And I look forward to talking with you and with Mark and with Gene as well on many, many shows to come. So congratulations again, Mark.
Thank you, sir. And thanks to all of you out there who've downloaded and streamed and subscribed to this program. Some of you since episode 1. We love you all. It doesn't seem like it's been 4 years since we kicked off this fun little experiment, this foray into all things futures options, but it has. 4 years in a month. Time flies when you're talking futures options. You guys can go back and check out all the archive episodes. If you subscribe to this show, it should be there available. If not, just go to our network. If you're coming in through like an iTunes or other places, it's probably going to be hard to go all the way back there. So our app or our website, the two places you probably want to go. We have access to all the archives there. It's kind of fun to see what was trading back then, what was lighting it up, and how much things are similar to today, which is kind of interesting out there. So again, you guys were sending all the thanks into us. I want to send the thanks back out to you guys. You guys are the reason we're able to do not just TWIFO 200 times, but VolViews 400 times, Option Block 900 times, and everything else that we do here on the network. You guys are the reason. You keep it churning. Glad to see it's working for you these days in these crazy times. So keep listening. We want to thank all of you out there for downloading, streaming, and subscribing. Stay sane. Stay safe out there. And we'll see you back here for another 200 episodes of TWIFO really soon.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit FTSERussell.com, CBOE.com, and CMEGroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.